Hi, it's John Terry with Vision Advisors, and thanks for joining us for this Insight with Vision. We want to take a few minutes and reintroduce you to one of our strategic annuity partners, AIG. On the phone with us is Terica Novak, one of our support persons, and an amazing lady who is a wealth of information and knowledge from AIG. And she's brought us some interesting tools and resources that can help you as you're looking to solve your client's problem, discover some new and innovative tools and resources that can help you do that in a very unique way. So Terica, I want to say thank you for taking a few minutes to share with our audience. I'm going to stop talking and turn it over to you and let you share some of these amazing tools and resources that you're bringing together to our producers.
Okay, wonderful. Thanks for the introduction, John. I wanted to give you a purpose to this presentation. First of all, we wanted to introduce you to the AIG Annuity Playbook. For those of you that haven't seen this playbook, it's not password protected. So you want to type in this in your internet browser, aig.com/annuity playbook. And you have a plethora of tools that are available to you. So I wanted to introduce this playbook. And more specifically for this discussion, I wanted to introduce you to our programs and resources. It holds a lot of our client value add programs as well as our agent value tools. 3 tools I wanted to dive down and share with you specifically. Those are number 1, the AllianceBernstein white paper, which is available for your agents directly or center of influences, referral sources, such as CPAs, investment managers, those that really like to get into the weeds. There's an AllianceBernstein white paper exclusively available from via AIG that discusses the better bond alternative and ways to help clients build more wealth. And why is that? Well, in addition to that, we're going to discuss the client white paper. That's the second tool that we're going to discuss, to solving the fixed income quandary client white paper. And the third, and last but not least, is the range of outcomes calculator. It is an agent tool that benefits the agents in showing their center of influences or clients the purpose of why we're talking about fixed index annuities as being a fixed income alternative. So why are we having these particular conversation? Why consider what's the benefit to you? Well, first of all, over the past 4 decades, the 60-40 stock bond portfolio has averaged about a 10% returns. And that's been wonderful. The challenges that's facing today is that we are facing returns and lower returns, more volatility, higher risks. And why is that? Well, you named it, high government debt, and in addition to inflation. That traditional 60-40 portfolio is going to struggle, or has started already struggling to build wealth. So the purpose of going through these 3 tools, the AllianceBernstein white paper, the client white paper, and the agent tool range of outcomes calculator, is to show how allocating a percentage of that 60-40, specifically 40% of that bond portfolio, more specifically half of that bond portfolio, so 20 of the 40%, to a fixed index annuity could improve investment returns. So let's get started. Let's take a look and click on that AllianceBernstein white paper. As you can see here, it does directly say that it's from AllianceBernstein. Now, does AllianceBernstein design annuities? No, they do not. They're not in the annuity business. However, they've created investment strategies that are held in multiple annuity products, variable and fixed index. In this paper, it again discusses a nice little blurb here down at the bottom, a summary, that classic 60-40 stock bond strategy will struggle to build wealth. And that's, and then they're actually, as a money manager, mentioning allocating some traditional core bond exposure to a fixed index annuity could actually change the game. Well, how so? Many are saying, look at it, look as a fixed index annuity, not as a product, but as an asset class. Here's why that is. In our figure 5 or display 5, you see a 60/40 portfolio, which is in the green, an FIA enhanced portfolio, which is in the blue. That's a 60/20/20. Now, the basis of this portfolio, the background of it, is that we ran 5,000 simulations. These returns were provided by Journey Guide, a retirement planning software, over the past 10 years of historical, dating back to December 2020. Of that, we're seeing that the traditional FI 60/40 portfolio versus an FIA enhanced portfolio of 60/20/20, 20% being in the fixed index annuity, an accumulation only, no fee, has a 72% of and improving the overall outcomes of average returns. How much so? Well, the FIA enhanced portfolio outperforms it by 3.9% margin versus when the traditional 60/40 wins 28% at a time, it only wins by 2.1% of a margin. What's the result? Well, the dollar result is, take a look here. The average and advantage worked out to equal $64,798 over 10 years. The positioning questions we'd like for your agents to think about is that if you have, or if your clients have most of their traditional portfolios in the 60/40, after reviewing these numbers and the study based on AllianceBernstein, a top money manager, what do you think would be a good idea? Let's go into our second tool, shall we? Just to discuss the client white paper. We can go back into our AIG playbook and click on Solving the Fixed Income Quandary Client White Paper. The purpose of this is a little bit more of a discussion on how safe are bonds if interest rates rise. Basically, this is going to be more in layman's term to discuss, give a client a better understanding on the relationship between bond prices and interest rates and how to prepare themselves for today's fixed income challenges. We also know that looking at figure 2 here, historically low yields will not be enough to keep pace with inflation. Bonds are less risky than stocks? Not really. There can be a volatility in bonds just as much as there are in traditional markets. You can see that in figure 3. There were double-digit losses back in 2020 in March. Actually, just quoting from a Barron's.com article, we saw, let me pull that resource here. In the July 26, 2021, Barron's.com, it says the Bloomberg Barclays U.S. Ag Bond Index lost 4% in one day during the height of COVID, beginning of COVID, I should say. And a client had a muni bond fund, which an advisor software analyzed a portfolio's high risk due to that muni bond fund. Why? Because it lost 28% during COVID. He mentioned, quote unquote, that's high risk for the yield you're getting. Last but not least, I'd like to point out here on page 6 of the client white paper, reasons to consider an FIA. An FIA may provide more asset income and protection guarantees. And that's really the bottom line, how they can provide more growth with protection of asset and their growth. This takes me to our third tool. Our third tool we highlight here is the agent tool called Range of Outcomes Calculator. When we click on it, there's 3 data points that we're supposed to plug in: the index annuity contract term years, 5, 7, or 10 years terms. The data based on index and returns on the S&P 500. Keep in mind, this is live S&P 500 historical returns all the way back for 40 years. And a caps, depending on what cap the index annuity that you're working with, we can plug that in as well. So I did that here, and I plugged in our 5-year index annuity. Why 5 years? Well, I decided to go short term, knowing that traditional clients for bonds, they're looking for the lower duration versus longer because of the challenging yields going out further. I also wanted to say, let's take a look at what occurred over the last current 15 years of historical in the S&P. And knowing that our 5-year index annuity, our Power 5 protector, is currently at a 4.1% cap rate, I plugged that in specifically. What this is telling me, the results calculated 522 contracts over the past 15 years. Basically, one contract that was issued weekly over the last 15 years came to 522 contracts. On average, the average return of those 5-year contracts, 522 of them, with just the S&P cap alone, was 3.16. You also see the best, worst, and medians. You see the distribution of index annuity outcomes. 82% of the time we had a positive outcome. Percentage of times that we hit the index cap, almost 88% of the time. What does this tell you? Could this possibly be that fixed income alternative better than a bond? Most absolutely. Basically, just to recap, this calculator demonstrates the range of interest an FIA or fixed index annuity would generate with a most conservative allocation, such as the S&P 500 cap. And keep in mind, this is the S&P 500 returns price index, excluding dividends. Why would we want to show this? Well, we want to show what the most conservative allocation in an index annuity, by the way, it's an S&P cap, would provide, and how much of a yield would it provide? Would that yield, that 3.16 over a 5-year period, be higher or better than what yields are offering in bonds today, high quality rated bonds today? And the answer is yes. Even more so than tax-free municipals. Keep in mind, the fixed index annuity, we know that 100% of the principal is guaranteed and interest is protected. A fixed index annuity is your guaranteed par plus interest story. Guaranteed par plus interest story. So the questions for agents is today, if an FIA enhanced portfolio provides better return, better client experience, lower costs, and better compensation, why wouldn't you offer this as a solution? Offer the fixed index annuity, either a 5-year or 7-year or 10-year product, as that complementary of that 60-20-20 new allocation portfolio. Keep in mind too, with the Merrill Lynch, PIMCO, and AQR strategies, we can find those strategies as we go in the rates and materials in our playbook and click on our index rates. We can see we can provide higher participation rates with our AQR strategies, our Merrill Lynch strategies, and PIMCO Global Optima index crediting strategies. Keep in mind too, just as a quick summary, we talked about how we're here to help you enhance your business, give you the tools that you need, such as 1, the Lyons-Bernstein white paper, available exclusively from AIG. 2, the client white paper, educating them on fixed income investing and the risks they take in a rising interest rate environment. And 3rd, the agent tool, the range of outcomes calculator, that helps them visually see and prove that a index annuity can be that guaranteed par plus interest story that can enhance their traditional 60-40 to a new 60-20-20 portfolio. Ultimately, the fixed index annuity and fixed income alternative toolkit by AIG can benefit you to deliver the tools that you can help you succeed, help you close more business, stand out as the expert in the room, stand by you as a name brand, and offer our top sales support with my team, myself, Tirka Novak, Bryant Hunter, and Katie Kalora, and offer you the customized solutions you can count on. The next step I encourage you to think about as you work with Vision Advisors and John Cherry and his wholesalers is think about 3 prospects, either clients that you can speak to or center of influences, referral sources, COIs, CPAs that you can utilize and share that Alliance Bernstein white paper and or the client white paper, and thus provide them with value-added information on how an FIA is that better bond strategy. With that, John, I'd like to hand it back over to you and answer any questions or thoughts you might have.
Terica, I'd just like to say thank you for taking a few minutes to share those resources from the playbook. We've had an opportunity to share that specific Bernstein paper, the white paper that you shared with the audience today. And we have actually used that very same illustration to show a producer how to sit down with their client and really understand what's going on today. And I think you did a great job touching on it. We've really got essentially the perfect storm brewing today. We've got a continued low interest rate environment. At the same time, we've got incredible volatility in the stock market. And the question is, how much higher and how much longer can it go up before it's got to go down? And of course, we're dealing now with, due to the amount of money our government has spent in dealing with this COVID pandemic, we're dealing with significant inflation issues. All of those are really creating pressure on the traditional 60-40 model. And the ability to be able to show a third-party validated resource from a trusted resource like Alliance Bernstein to be able to speak to the fact that an annuity can actually complement what a financial advisor is doing with their clients to create a better outcome and a more predictable, stable income solution for them over the 20 or 30 years it's going to be their retirement. It is extremely powerful. And then the last tool that you shared, as we looked at really the different ways to look at the calculator and going in and looking at the different annuity options that you have available through AIG and looking, thank you, Terica, and looking at how these have actually performed over time. I mean, when you're looking to give your customer satisfaction and confidence in the solution you're recommending, and you can utilize this range of outcomes calculator and show them that although just like any other indexing product, you're not going to get a home run every time you get up to bat, but here 82% of the time, you've got at least a base hit. And 88% of the time, right at it, you've at least reached the cap that's available in the product. That speaks to the strength and the stability of the product solution that you're recommending to your customer, which gives them the confidence to say yes to the recommendation that you're making. So if you're not availing yourself to these tools and resources, let me encourage you to do so. You can access these, as Terica said, AIG.com/playbook. We have that link also on the Vision Advisors website where you can access that directly from there. But this is a very powerful set of tools that you can use. And if you need some coaching on how to position that in terms of the conversations that you're having with your customers, that's what we do very well here at Vision Advisors, helping position you in the conversations you're having to see success. So, Terica, I want to say thank you for the great job AIG has done in putting these resources together and for coming on for a few minutes to share with our audience what these particular resources and tools can do to help them solidify the sale, to bring comfort to the client and give them confidence that they're making a good financial decision that's going to be in their best interest as they're trying to figure out how they're going to navigate this crazy inflationary world we're living in right now. And make sure they've got enough money that no matter how long they live in retirement, they've got a guaranteed paycheck that lasts as long as they do.
Here's the sales strategy, John, as we summarize: utilizing the 60-20-20 portfolio. So just want to let you know that that's also in the playbook, and we'd love to assist with any opportunity out there with yourself and your wholesalers and your agents.
Absolutely. I had not seen this one, so thank you for sharing that. That is a very great visual, guys and gals that are listening to this or watching this video. This is a very powerful tool that you can use to be able to explain to your clients in dollars and cents a hypothetical illustration of what that looks like and how adding a fixed indexed annuity as an asset class. That again, something very powerful that a lot of financial professionals are missing. This becomes an additional asset class in the portfolio that gives them strength, stability, and guarantees they would not otherwise have. It's going to reduce volatility. It's going to create a better sustainable return. And it's a very strong visual that can help you get your client to understand what you're proposing. And at the end of the day, to get them to understand how it financially benefits them and their family as they're looking at how they navigate retirement. So with that, I want to say thank you all for joining us. Terica, thank you for sharing this with us today. On behalf of all of us here at Vision Advisors, if you've got questions related to anything we talked about today, please give us a call at Vision Advisors, 1-800-505-8489. Again, 1-800-505-8489. We'd be happy to help you in that regard. And also, please feel free to reach out to the folks at AIG, to Terica and her team. They'll be happy to give you some assistance with that as well. With that, Terica, there's you and your amazing group of folks.
Thank you, John.
888-438-6933. Yes, ma'am.
Have a great day.
Thanks, Terica. I appreciate it.